Today, markets are anticipating the report of major importance, U.S. non-farm payrolls. Since early morning, the U.S. dollar has been trading firmly higher, thus being on track to strong weekly gains as traders are encouraged by the upbeat ADP National Employment Report. However, the U.S. currency is running out of steam in the New York session. The U.S. dollar versus the Canadian dollar pair is likely to trade with high volatility as Canada is also due to report on its labor market. In November, the number of jobs in the U.S. private sector spiked by 266,000. That confirmed steady economic growth in the U.S. The resolution of the strike at General Motors contributed to such robust employment. Now the consensus suggests modest job growth of 160,000 in December. Nevertheless, some traders still hope that the actual figure will be better than expected. Such expectations support the U.S. dollar. Besides, Washington and Tehran refrain from entering a full-blown military conflict. The first phase trade deal is scheduled to be signed on January 15. In this context, the U.S. dollar index opened the North American trade at 97.23. The U.S. Department of Labor reported that non-farm payrolls rose just by 145,000 in December. At the same time, the unemployment rate remained at the lowest level in 50 years. Thus, the U.S. labor market completed the decade with a jobless rate at 3.5%. Today, traders also await data on Canada's labor market to determine sentiment on the Canadian dollar. Earlier this week, traders sold the loonie following a weak IV PMI. Judging by fresh employment data, conditions in the labor market are improving in line with expectations. In other words, Canada's labor market revealed solid employment growth following sharp contraction in the previous month. Besides, the unemployment rate edged down in December. In response, the loonie gained ground for a while. However, even such upbeat data is not enough for the U.S. dollar versus the Canadian dollar pair to develop a steady downtrend. Today, the U.S. dollar versus the CAD pair was trading slightly higher at near 1.30. The currency pair has been in the uptrend for the third day in a row due to a decline in oil prices. Investors will take notice of remarks by Bank of Canada Governor Stephen Poloz. If the policymaker speaks on monetary policy, he will trigger higher volatility of the U.S. dollar versus the Canadian dollar pair. Hints about a rate cut in the short term could dent strength of the loonie. In November, Stephen Poloz said the ongoing monetary policy was appropriate to the domestic economic conditions. That's all for today. Thank you for watching and have a nice weekend. See you back on Monday.